Hello everyone, this is Carbonomics. Today we're going to be breaking things down to the basics and discussing what ESG is, why ESG investing has been a trend, and some of the undervalued industries to potentially focus on in your investing. Briefly, ESG stands for environmental, social, and governance. Environmental relates to the climate or impacts on the planet, social being things like the well-being of staff or diversity, and governance being how the board of directors is formed or executive pay, just to list a few examples of each. Now, not only on this channel, but for most investors in general, the focal point of ESG investing tends to be on the environmental aspect. Possibly some of the governance concepts as well, the company structure and executive pay probably being the two most important ideas. But this channel also focuses mainly on the environmental side of investing. Why is this the case? Well, the social and governance aspects are not as concise or easy to target. There's no explicit company that's been created with the precise goal of increasing female employment at particular firms, at least that I know of anyway. But there are companies with clear environmental goals in mind, and their whole purpose of existing is to make money creating environmental solutions. But the most important driver is the fact that there's a lot of money to be made by the companies that solve some of the most dire issues facing our planet today. Just how much money is going to flow into these companies and sectors? Well, McKinsey conducted a study on just that. In total, to transition to a net zero future by 2050, the world would need to spend around $275 trillion, around $9 million trillion per year. Now, it seems that McKinsey is inflating those numbers and their costs, so the cost could actually be far lower. But the point is, it will likely cost many trillions of dollars to reach net zero, probably over $100 trillion likely. In my view, there's really no trend that will see more capital flows over the coming decades. How do I know that? Because this issue, whether we personally believe it ourselves or not, this issue is viewed as a life or death situation by many. There's a large swath of population and investing community that believes that if we don't invest in these areas, we'll essentially be wiped out as a species, or the Earth will become a significantly worse place to live. You have a strong emotional driver for the wave of funds that we'll see enter the space, especially after the current energy crisis subsides. If we position ourselves properly before the general public learns more about some of the undervalued industries that we'll discuss in a bit, many of these companies we choose will benefit immensely from these positive trends. And keep in mind, the stock market is, at the end of the day, a liquidity machine. You have to not only follow, but anticipate where that capital is going to go next. Right now, many of the sectors in the ESG space are not regulated well enough, carbon credits especially. So many market participants don't feel particularly comfortable investing in these sectors. Many companies in general are accused of greenwashing at the moment. And overall, there's not enough oversight or incentive yet. But these are becoming a focus of government bodies and financial institutions. I've covered previously on the channel how the SEC is looking at regulating ESG and climate disclosures. We have the Commodity Futures Trading Commission, the CFTC, discussing oversight of carbon markets. And we even have government bodies like the International Organization of Securities Commissions, or the IOSCO, investigating how it could regulate ESG and carbon markets. These are just a few of the government organizations discussing these ideas, working towards more regulations and requirements. And all these organizations are essentially making these sectors more investable over time. Another benefit to investing in ESG is cheaper cost of capital. I've discussed green bonds on this channel previously, but this is a huge incentive for companies to start making environmental changes in their operations. The green bond market's the fastest growing debt market, eclipsing over $1 trillion in value recently. Essentially, a green bond many times will offer a lower interest rate than a traditional bond. In exchange, the companies receiving that loan will have to follow ESG principles, like reducing their emissions levels or hiring more women as a percentage of the company. So this is one of the main financial incentives to go green. Another aspect to think about for the existing companies in your portfolio is how much emissions they'll end up producing. This will become an issue for companies over the coming years as there will be increasing carbon taxes or carbon credit schemes. Soon enough, it will become increasingly costly for companies to avoid investing in green initiatives. Many of the companies in the ESG space don't need to worry about this issue, and many of them are actually being paid by the government, if anything, not paying carbon taxes. All these factors will culminate into a situation probably unlike anything we've ever seen in finance. Even if only a fraction of the expected funds go to green initiatives, these companies are so undervalued. If you're patient about it, it might be difficult to lose. Obviously, that's not financial advice, um, but tens of trillions of dollars, is still a larger total addressable market than most industries could dream of. But on a related note, the industries everyone is focused on currently in investing are the sectors like electric vehicles, renewable energy sources, charging stations, and other large-scale technology. These were overvalued. They've been decimated over the past year thanks to the markets crashing on recession fears. But that doesn't mean it's time to start buying into these industries. All these sectors are capital intensive, leading to lower profit margins and slower growth or less capital return to shareholders. In my view, I'd rather focus on better industries, especially smaller companies with a chance to revolutionize the market. The sectors I've chosen to focus on instead are capital light business models related to ESG concepts. Some examples being financial products, market infrastructure like futures exchanges, software companies, or royalty and streaming businesses. Companies with higher margins or higher quality revenues that tend to trade at a premium through higher price multiples as well. And this provides higher upside in times like we're in right now, where share prices have been dramatically depressed, in many cases unfairly. Another great thing about many of these industries is that they're going to be useful regardless of the generalist view of environmentalism. Even if climate change was proven to simply be a hoax or what have you, these companies are still necessary for a variety of purposes. For example, a company I've been discussing recently, which I'm a shareholder of, Duro Clean Technologies, is developing a revolutionary plastic recycling process. Well, even if climate change is debunked, we still need to clean up our oceans. Pollution and cluttering the environment is still an issue we need to solve, even if CO2 is no longer a large concern. And this creates a level of security for shareholders like ourselves, that the products these companies offer is necessary regardless of what happens. But in general, I've laid out a variety of factors and some of the industries to focus on for investing in ESG, especially in undervalued companies the market has been ignoring for a while now. Many of these companies I've invested in and I've already been covering on the channel, like Aduro Clean Technologies, Avex Technologies, and many of the current public carbon credit royalty companies. I'll link the videos of these companies in the description below. But yeah, if you like the video, please remember to subscribe to keep up to date on all of my videos in the ESG space. Thanks for watching.